Well, joining us now to discuss all this is Dominic Haywood, who is an oil analyst at Energy Aspects. Dominic, thank you so much for taking this call. What's your first reaction to what OPEC has announced, or rather has not done, in today's meeting?
Well, thank you for having me today. I think it's first interesting to note that this isn't a surprise to the market. It was widely expected that the quota would be kept at 30 million barrels a day. There were some suggestions from some analysts in the market that perhaps the quota would be increased, but I think the general consensus in the market was that we would see the quota rolled over, and that's what's happened today. I think that is a sort of contrast to what happened last November, where the decision not to cut production was actually quite unexpected. The market was oversupplied and people were calling for a production cut, whereas that's different from this time because it was widely expected.
Fair enough, and therefore perhaps that really justifies the sort of reaction we're seeing. There's no violent reaction in the oil markets after that meeting. But where does this leave oil anyway? I mean, OPEC seems to be saying that the demand-supply dynamics are not that badly skewed. However, we haven't seen any meaningful recovery in prices.
Sure, I think there has been a small recovery in prices, but agreed it's not a really meaningful one. But I think, going forward, there are three quite specific things that have supported markets and will continue to do so in the future. The first one is obviously, as you mentioned, an increase in global demand, and we see that up by 1.9 million barrels per day in Q1 so far in 2015, and that's definitely global. Although there is strong demand in Asia as well, particularly in India, where diesel demand has been strong as India moves into a sort of industrial economy again. And indeed, there's also been a lot more industry stockpiling of crude oil. A lot of that's being done by China. And then finally, there's an expectation in the market that at some stage in the future, US supply might respond to the lower prices. So those are sort of the three things to look out for in the future, and the three things that have helped prices increase quite recently.
What about the dollar? Because, I mean, another factor that's playing out is all that's happening with U.S. rates and the kind of data we're seeing. We've seen that jobs report today and that huge spike in the dollar. Do you see that having any sort of major impact in terms of how the crude markets behave over the next couple of weeks?
I don't think there's a major impact in terms of supply and demand fundamentals. I think it sort of impacts trading a bit more. Therefore, rather than making prices appreciate or depreciate at a fast pace, it might just cause prices to trade within certain ranges as dictated by movements in the dollar.
Do you have a range in mind, or some kind of an estimate of where crude might end the year?
Well, we think a sort of a yearly average of around $64 a barrel in Brent, but we do say that there would be quite a lot of volatility in that forecast, simply because there's so much uncertainty as to what happens with production.
And that's for December 2015?
That's for this year, the yearly average.
Okay. All right, Dominic, thank you so much. Good talking to you today. Well, that's a view on the oil markets. Pretty much going according to script, and that's why we've seen what is a mild reaction, about a 0.5% decline in the price of oil right now.